effectively gambling. But it gets better. He did not even know how to read the charts. Like many developing traders, he thought he did, so he failed. Traders ask, "Can't I just read charts?" I received an email one night during an epic Cavs-Celtics playoff game. I have to admit I was more interested in the game than responding to this email, but I took a swing at it the next morning. "Hey Bella, this morning when you were trading USO on the open and buying at the 32 level, initially 32 had dropped, but you mentioned to someone else who was also trading USO that you did not hit out because you wanted to see the offer hold below 32. What was the reason for giving USO that little bit of time to see if it would hold an offer below 32, as opposed to just automatically hitting the bid once 32 dropped the way you normally would? Was it something you saw on the tape, or was it just because 32 was a really important level and wanted more confirmation than just a bid dropping for the first time?" My response: I bought USO just in front of 32 yesterday a few times. 32 has been a significant support level in USO recently. The first time USO traded up toward 30 cents, it slowed and I sold half. I bought some back when USO traded near 32 again. The bid dropped 32 and USO showed me the 98-cent bid. I did not hit it, thus the question above. I keep tight stops. I was long USO because 32 was the support level. So why didn't I hit USO when the bid dropped 32? Good question. My exit plan was not to hit USO until the offer held below 32 or the 31.95 bid dropped. Stocks often pretend to break levels and then trade much higher. I did not want to get shaken out in a fake breakdown. Further, I was holding USO for a large move. USO had bounced off of 32 the day before and hit 80 cents and even the whole a few times. This intraday there was some resistance near 32.50. So my upside at a minimum was 50 cents, perhaps 80 cents to $1. My risk-reward was still more than 5 to 1 if I gave USO to 94 cents-ish. But there is a much bigger issue here, and it is something that we preach on our desk daily. Do not fall in love with charts. The order flow is more important than any chart. Use your trading skills to supplement your chart reading. Since I did not see an aggressive seller before the first time USO dropped the 32 bid, I did not hit out. If I had seen the seller, I would have been quicker to hit out. It is easier to learn how to read the tape, or at least learn how to read the tape for signals to buy or sell, than to learn how to trade with just charts. The traders I know who mainly trade off of the charts these days all learned first how to read the tape. And while they claim that they do not look at the level too much these days, many are just mistaken. They have so mastered reading the tape that they do not even understand that they are using it to lighten up or where to enter with their trades. G-Man was offering his thoughts on a particular trading day on his Friday spot on StockTwits TV. After his appearance, I heard through back channels that young ladies from the StockTwits community started asking, "Who is that G-Man guy?" Oh, to be young and single. G-Man discussed BBT. He highlighted a bullish chart pattern. BBT offered the opportunity to exit anywhere from 26.50 to 27. See figure 8.7 on your bonus material. G-Man started his position at 26.50 because he spotted the bid buying and holding at this price. He saw the bullish chart pattern and then found the best price with his tape reading skills. If he had started his position at 27, this would have completely changed the risk-reward for this trade. If he entered at 26.80, he may have been shaken out of his position. But after he saw the buying at 26.50, he loaded up and was able to catch a significant up move with size. Who is better than you, G-Man? Using charts is an art, not a science. It takes years to become a great chartist. As an example, I knew one prop trader at it for a while. He never made money. We would periodically IM about trading, and I could tell he had no idea how to read the tape. He was absolutely mesmerized with his charts. He couldn't decipher a held bid from an orange. He failed. Another trader I knew, after a year, proclaimed, "I have trouble reading the tape. It just is too fast for me to pick up." He didn't make it either. I just don't get why people fall in love with their charts. There is so much more information from the prints, inside market, than the charts for short-term traders. And for long-term traders, reading the tape could dramatically improve their entry prices. How much more money would long-term traders make if they improved their entry prices, making more per trade? And how much more would they take home if they improved their win rate by starting their positions at better prices, decreasing the trades in which they were stopped out? Much, much more. Again, it is like people are more interested in staring at their pretty charts than in making money. If I told you I could offer information that would help you increase your win rate for trades, wouldn't that interest you? Gary B. Smith, in How I Trade for a Living, offered some very interesting thoughts on charts. Charts just weren't getting it done for me. They were great at telling me about the past, but were of little use in foretelling the future. Some who worship at the altar of charts may counter that the purpose of charts is not to predict, but to provide hints or clues to the future. Regardless of the semantics, I would have been much better off never looking at a chart. So it wasn't a tough decision in the spring of 1985 to throw out the charts and never consult them again. William Eckhart, from The New Market Wizards, written by Jack Schwager, commented, "Most things that look good on a chart, say 90%, don't work. But with reading the tape, you can profit from day one. In fact, it's very simple. When we find a stock in an uptrend and then spot a held bid, this is a long. Easy, no? It will work more times than not. When you spot an important intraday resistance level cleared, you get long. Again, not difficult. And on the first day you trade live, you can crush this simple pattern. Mind you, do not discount the use of charts. We use them all the time. But it is hardest to start your career by relying solely on the charts. And the guys who do are great chartists. But remember, they have deeper pockets, so they can withstand a drawdown that you might not be able to. Please understand just how good they are at reading charts, and the years of experience it took staring at hundreds of thousands of charts to achieve this expertise. When I catch some guys falling in love with their charts, I simply state, all the best traders on our desk have learned how to read the tape. G-Man, Moneymaker, Dr. Momentum, J. Toma, the Yipster, Z-Money, Mr. Spencer, Franchise, G, Tickster, Roy. You will not become a good intraday trader if you do not develop this skill. It's up to you. How do I read the tape? There are old-school traders who have now transitioned to charts exclusively, or so they think. They started reading the tape and then gravitated toward charts. But they still use their reading the tape skills. They undervalue these skills because they are so focused on their chart patterns. But they exit positions that are not working for them right away because of the tape. They choose entry points superior to lesser traders because of, yes, their ability to read the tape. I know when I am making technical plays that I exit trades when I do not like the price action. I can just tell by the way a stock prints, or how the offers step down, if a stock may not hold an important technical support level. And so I exit. Sometimes my decisions are so fragile that if you pressed me, I could not verbalize exactly what I saw from the tape that made me exit. I kinda know it when I see it, based upon years of just watching the damn tape. Every so often we invite potential candidates to visit our desk and sit in on a video review session. We were considering a middle-aged gentleman who had worked his whole life in IT at Goldman. On this Saturday, he sat watching film with our desk. As we watch, I will call out where a stock is a buy or a sale, so our guys learn where to buy and sell. After the class, this gentleman approached me. IT guy. Mike, had you traded BBT on that day? Bella. No. IT guy. How did you know when it would go up and down? You kept predicting where it would trade. Bella. I was reading the tape. He looked at me incredulously. IT guy. But you were never wrong. Bella. I did have a good feel for that stock. IT guy. That was incredible, how you did that. Did you really think I would leave this anecdote out of my book? If you are a trader who has started your career underperforming and have not developed the skill of reading the tape, then please do not get discouraged. And do me a favor, please. Go find your trading results, put them in the shredder, and move on with your trading career. It is too hard to start your career exclusively by reading the charts. If you do so, you are trading with the equivalent of one hand tied behind your back. You are missing an immensely important skill. Learn how to read the tape. Remember that the best part of trading is that tomorrow you can start getting better. Well-rounded traders know how to read the tape. They also know all the little trading tricks to improve their P&L, a little something I like to call scoring, which will be discussed in Chapter 9. Chapter 9. Maximizing your profits with scoring. Some prop traders, as long as they take home a decent-sized check every month, are content. Not me, and certainly not any of the traders I employ. There are always ways to squeeze more profits out of each trade, just by some basic tweaking. I call it scoring. Scoring, simply put, is the skill of maximizing your P&L. Professional golfers often comment, "I struck the ball solidly, but I didn't score well." Fortunately for me, I don't have this problem. Generally, I don't hit the ball well, thus I don't have the opportunity to not score well. Similarly, a basketball commentator often differentiates a shooter from a scorer. As a professional trader, you can make good trades during the month, yet not maximize your P&L. Do you score well? There are steps that you can take to ensure that you are scoring well. You can sit at your trading station all month with the same skills as those around you, equal preparation, the same market opportunities, but end up with a P&L far worse than the guy sitting next to you, despite all things being equal. Economists call this ceteris paribus, for any Latin geeks listening to this book. So let's discuss a few things that will help you maximize your trading paycheck at the end of the month. Let's discuss how to score as a trader. Setting your maximum intraday trading loss. First things first, set a max intraday trading loss. There will be days when you just do not have it. Most traders trade 48 to 50 weeks a year, 5 days a week. Is it likely that you will be on every single one of those days? As someone who's been doing this for over a decade, I can tell you outright, no. Traders are on par with professional athletes, as our job is entirely performance-based. Win or go home, so to speak. Remember that great Michael Jordan commercial when he talked about how many times he failed in his career? I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the winning shot and missed. I've failed over and over and over again in my life, and that is why I succeed. Just like Michael Jordan was off on certain nights on the court, so will you be on certain days in the market. Why do you think coaches pull their players when they are not playing well? They are more harmful on the field than off. When you are underperforming, you are hurting your team and your trading business. You need a system to yank yourself over to the bench. A stop loss is your answer. When you first begin, set your max intraday loss for half of your median gross P&L. So if you make $1,000 gross on a median positive day, then set your maximum loss limit at $500. As you become more experienced, you can adjust this max loss limit to half of your last best trading day. But even the most experienced trader must set a limit. Over the years, I have learned to become a very consistent trader. But in the fall of 2008, I was having a horrid day. I got caught in multiple reversals, my kryptonite, and was down a lot for me. Make sure whatever trading platform you use has a loss limit feature. SMB uses Lightspeed, the best intraday equities platform available as I write. We had switched from another platform to Lightspeed about 12 months before this ripper of a day. And on this day, I went to enter some new orders. They were not going in. Then the following transpired. Bella. Anyone having trouble entering orders? Steve. Not me. G-Man. No problems, Bella. Bella. What the... Expletive deleted. I still can't enter my orders. The Enforcer. Did you hit your loss limit? Bella. I don't even know what my loss limit is. So I called up the Lightspeed help desk. Sure enough, I had hit my loss limit, but didn't know it. It took me a year on Lightspeed to have a day where I was marked down enough to even learn that I had a loss limit. Hey, I told you I am a consistent trader. Bella. Can you raise my loss limit, please? Lightspeed help desk. Okay, have your manager call in the request. Have my manager send in the request. This is one of those moments where you quickly calculate 3 responses. 2 are not appropriate. One might be, I am too rich and famous to deal with this nonsense, son, so get me some more buying power, pronto. And then there is a third, which I chose. Bella. Aren't I the manager? Lightspeed help desk. I don't know. Are you a manager? Bella. You know, I would hope so at this point, but on some days, based on how my desk ignores me, sometimes I wonder. The nice young man at the help desk raised my loss limit. Apparently, I do have manager status. It had been much lower than half of my last best trading day, and thanks to my Lightspeed interlude, I actually saved thousands, since my dopey orders, if executed, would have manifested larger losses. Steve has a tendency to exceed his max intraday loss. We have code words, just like when we were playing high school basketball, which, if spoken by me, informs Steve that he is done for the day. Since we are so creative, my code word to him is Mr. Spencer. When Steve hears Mr. Spencer from me, he knows to trade out his positions and then shut it down for the day. This saves him thousands every month. Even the best of traders like Mr. Spencer have set loss limits. So should you. Trading based upon the time of day. I tailor my trading based upon the time of day, the open, midday, or close. Dr. Steenbarger coached Dr. Momentum that each time period should be treated like a different business. I trade with the most size, most frequently during, historically, my most profitable time period. Makes sense, no? I trade best on the open, meaning I make the most money on the open. My trading statistics confirm this. As such, I increase my size during this time and make more trades. The open tends to last about an hour. My stats also show that during the midday, I do the worst. So I lower my tier size and keep my stops tight. I only make trades that offer the best risk-reward during this period and make fewer trades. Into the close, stocks are more directional, so I stick with those that are trending up or down in the last hour of the trading day. I raise my tier size from the midday, but not as high as on the open. The danger of midday trading. As I just said, the midday period, 11 a.m. to 3 p.m., is the most difficult and least profitable time of day for me. I am not alone. Why? The market is slower. There is less volume and liquidity. A small order can cause a stock to move much more than you would anticipate. More strange moves in which you are not able to quantify, such as a surprise news announcement, do not allow you to calculate risk-reward as you would normally. A good trader makes note of what time of day it is, when he trades most profitably, and adjusts his trading to fit such times. There will be favorable risk versus reward opportunities midday, but much of this time for me will be spent finding stocks to trade into the close when the volume picks up. Following is a list of adjustments you should consider for midday trading if this is your worst time period. Increase your intensity and focus. Lower your tier size to the lowest size of the day. Wait for great entry points. Take your profits quickly. Don't double down. Lower your loss limits to the tightest of the day. This is the most dangerous time of the day. A small order can move most stocks significantly. Be disciplined. Sometimes good trading is not trading at all. Stocks purposely appear tempting, yet are, in fact, not favorable risk-reward scenarios. Most importantly, gather information for the close. Watch the stocks trade. Search for trading ideas. Check www.briefing.com for economic news releases coming out. Gather some ideas from the traders around you. Find support and resistance levels, and set your alerts for these levels. New and developing traders tend to overtrade midday, and we see this on our desk. As such, we have implemented rules to regulate this. Basically, midday is just for exploiting our best setups and gathering valuable trading information for the close. If you are overtrading during the midday, you are not maximizing your P&L. In fact, it's a great time to give back a lot of the gains you might have made on the open. Your numbers at the end of the month will not reflect your true trading potential. Make the most trades with the most size during the trading periods that statistically are most profitable for you. Money saved during your weaker trading periods is money earned. Consistency. Everyone knows someone at some firm making a killing. Everyone. Even the new traders. And new and developing traders tend to overvalue this information. I want to be like so-and-so, big man on the desk, at XYZ firm, Chops Bank and More Chops Trading, LLC, who makes mid-seven figures. These newbies then develop theories about how to become that trader and bank that mid-seven figures. Oh, do they develop theories. I need to learn how to take pain, is one thought entering their minds. One of our guys, Playmaker, believes this. This drives Jay Toma and the rest of the senior staff nuts. The fact is that most trades you make will start working for you right away. But the new traders also hold stocks that are trading against them longer because they mistakenly believe this is how you improve. But common sense tells us that when a stock trades against your predetermined exit price, holding it only increases the chances that you will lose even more money. Baby steps. Mark Sperling of T3 Capital, considered one of the great day traders on the street, came to speak to our firm in the summer of 2009. Mark is one of those traders who everyone wants to be, probably because his annual P&L is among the highest of those in our tight-knit community. Mark counseled that becoming great takes time. There is a process that every trader must go through. You cannot skip steps. When he first traded, he was positive every single day. He made sure that each day he stepped outside his comfort zone to get a little better. He got better slowly, incrementally, while remaining consistently profitable. Stepping outside one's comfort zone, while initially painful, pays great dividends down the road. New traders mistakenly think that losing $5,000 is how they will learn how to make $5,000. This is not true. To make $5,000, you must first learn to make $500 consistently. Then you can gun for $800. Losing $5,000 in a day when you begin only teaches you how to lose $5,000 and how to trade irresponsibly. As Bill Murray said in the film What About Bob, baby steps, baby steps, baby steps. I am amazed at the new traders who have never made over $10,000 in a month, who do not recognize that 17 out of 20 days at $700 a day is a pretty good month. Do the math here. 17 days at $700 a day is $11,900. Assuming the loss limit is $500 a day, typical for a new trader, the 3 negative days take the total down to $10,400. Still not a bad month while just beginning. There are so many traders capable of doing this, yet they do not achieve this goal because they are focused on making the elusive $10,000 in a day, an opportunity that is seldom available given their undeveloped skills. This 5-figure-a-day goal is counterproductive. Your goal is to make as much as you can as you are developing and improving, not to show how much you can lose by trying to be a trader you are not ready to be. Here is what I see too often from my seat. I spot a new trader with the ability to make money. He has 2 solid days a week, so I know he can do it. But then there are 2 other days when he starts negative, gets more negative, and then finishes much more negative. If you can learn to eliminate 1 day a week from negative to flat, you can substantially increase your take-home. If you look at G-Man's numbers at the end of the month, he is generally gross positive 17 out of 20 days a month. Same with me, for that matter. This should be your goal while building your trading account. Ask yourself how much you can make at this point in your career so that you are gross positive 17 out of 20 days in the month. Achieve this goal, and then next month start working on an incrementally better P&L. Remember, baby steps. Proper sizing. There exists a myth that you need to trade with huge size to make significant profits. Loading up on size is called for at times when the risk-reward is in your favor, but you need to be able to handle the size. There is plenty of money to be made trading with modest size, especially in active stocks. You can make a lot of money trading in and out of an active stock with small size. Likewise, you can lose a great deal of money trading in and out of an active stock with too much size. Develop your trading skills, build your trading account, and slowly increase your size. Traders ask, do high-risk parameters affect your trading approach? Let's take a look at this email I received from a developing trader. Mike, since you are a consistent profitable trader, what would happen if you increased your positions in Apple, for example, from 2,000 shares to 7,500 at a time? Can you follow your set of rules with 3.5 times the additional risk with the same comfort? At what point does your consistent trading have to change because of the unusual high risk parameters? Neil, when determining my trading size, I calculate first where I can exit if I am wrong. Remember, traders first have to ask themselves before entering a trade, what's my downside? I can often get out of 1,000 shares for a small loss. Rarely can I exit that same trade with 5,000 shares in an Apple at the same price. And if this is the case, then my trade is completely different. I repeat, when making a trade, our downside should be a ratio of 1 with an upside of 5. If, with my extra size, I now cannot exit with the same risk-reward ratio, I almost always cannot add this extra size. Also, it is a lot easier to exit if a stock trades in my favor for 1,000 shares than 5,000 shares. If it will be harder for me to exit if my position works for me with 5,000 shares, then I must factor this in as well. Franchise. Finding your right size. Listen in on this conversation between Franchise and me in the fall of 2009. Bella, what happened today? Franchise, I'm working on increasing my position size by 100%. I can't figure out how to do this in some plays. Bella, I like that. You will not be able to do this in all of your trading plays. To increase your size by that 100%, you will have to be more selective. You will not be able to exit that extra size while maintaining the same risk-reward with all of your trading plays. Some of them, but not all of them. We had an intern in 2008 who asked one of our traders why we just didn't open all of our trades with 100,000 shares. Alan Farley said it well. Experienced traders control risk. Inexperienced traders chase gains. The intern did not last long. When you trade with too much size, you do not prove that you can handle more size. All you do is prove you are not ready to handle this extra size. You should, as a trader, work on increasing your size with select trades. But again, this should be done incrementally. You cannot jump from 1,000 share positions to 5,000 without many steps in between. Again, do not pretend to be a trader you are not. The Steve Cohens of the world weren't moving markets on day one with their volume. And I know for certain that many readers trade with too much size on the wrong trades. My email box is saturated with anecdotes of these mistakes. And you sit there discouraged because your results are being infected by these unwise trades. Sizing is a skill that must be learned, one that will impact your monthly results. As you increase your size, your biggest obstacle will be psychological. Jonelle Stroh at West Virginia University, in the Journal of Psychological Science, highlighted the sunk cost fallacy, a mental state in which you are more likely to make a poor decision the more you invest. You may see your position working in your favor and be tempted to take some off the table prematurely. Franchise has remarked to me that this is something he is still working on as a trader. This is a very common hurdle to clear when you first start sizing up. This will just require some visualization exercises. Simply spend 5 minutes every day visualizing these setups. Manufacture the urge to lighten up in as much detail as possible. Expose the poor logic of so doing, and breathe through your fear. In a few months, you will rid your trading of these issues. Ari Kiev described this as skiing downhill and losing a little control of yourself while maintaining overall control throughout. Why comparisons can be harmful. Comparing yourself to another trader is not in your self-interest. Most successful traders are ultra-competitive, and it is human nature to want to be the best trader on the desk. But I just don't get it. Traders do not focus on how well they are doing, but rather compare themselves to other traders. This can be very harmful, and here's why. If you read any history of business or Wall Street in particular, success tends to be measured relative to competition. But when businesses and people try to be something they are not, the results can be disastrous. Just look at Lehman Brothers and Merrill Lynch, who tried to transform their businesses to be more like Goldman Sachs. How did that work out for them again? First, what makes you think that the trader you are comparing yourself to is in the same hemisphere as your trading talent? Just because someone sits next to you on a trading desk does not mean that his production has anything to do with your ability. Traders assume that since they are trained in a similar style and trade at the same firm, that they should do as well or better than the next guy. Let me be clear. The person sitting next to you, behind you, in front of you, a few rows from you, is not you. They may miss trades that you don't. They may wuss out of trades that you don't. They may not see the screen as clearly as you do. You are your own small business. How well you do depends on you, not comparing yourself to them. This should be your attitude. Steve, you are becoming the best trader on the desk. The Yipster, I am? Steve, you haven't noticed? The Yipster, honestly, and I don't mean to sound selfish, but I don't pay attention to what others are doing. Steve once told me, before we started at SMB, I never had any idea how others were doing, cared how they were doing, wanted to know how they were doing. What did that have to do with me? If you make $2,000 one day and you top the leaderboard for your experience level at your firm, this does not mean that you had a good day. You had a good day if you traded well. You had a good day if you took advantage of what the market offered you on this day. Who the hell cares what someone else on your desk did? What does that have to do with you? You only care that one guy doesn't blow up all the firm's capital so that you can't trade any firm capital anymore. Otherwise, just focus on you. With all this said, there's a reason great traders have few peers. It's lonely at the top. Be mentally agile. If you develop a bias for a stock and it trades the opposite of your bias, can you still make money? Of course you can. You just need to be mentally agile. This happens to Steve and me a minimum of once a week. We gather all the pre-market information necessary. We have traded for over a decade. We are acutely attuned with the present market. Let's say we develop a short bias for FDX, yet it trades higher all day. We will still crush the stock. That's why we call it trading and not investing. I call this being mentally agile. Others might call it preferring to make money than be right. Once you get over this mental roadblock, becoming consistently profitable is within reach. Traders are smart, strong-willed people. It is hard for them to admit when they are wrong. It is difficult to quickly take the opposite side of a trade. I am reminded of the applicable quote from legendary short seller Jesse Livermore quite often. There is only one side to the stock market, and it is not the bull side or the bear side, but the right side. While it's easier said than done, make sure you're on the right side. Trading both sides. Rambus was in play on a Friday in June of 2009, and we made some chops long on a slow summer day to its resistance, 1780. 17.80 was an important technical level. RMBS collapsed from this level previously. See Figure 9.1 on your bonus material. 17.80 was an inflection point for us on this Friday and on Monday, and we made money on both sides using our trading skills. Let's discuss. Trading is not just about finding levels and then taking positions for most intraday traders. If it were that easy, you would not be listening to this book. Trading skills enable the intraday trader to determine when some levels will be violated and when some levels will hold. We combine our tape reading skills with our charting skills and our short-term intraday fundamental analysis to determine which resistance levels will hold. For example, on this Friday, we determined that the 1780 RMBS level would hold because there was more selling on the offer as RMBS neared 1780. There was a double intraday top at this level. The longer-term chart showed significant resistance. The buyers were hesitant to pay as aggressively above 1775. The news was not so important as to cause a violation of this significant resistance level on a first test. I lightened up with my intraday long position. Steve got short and caught a 50-cent down move. On Monday, we saw the strength from the tape in RMBS. The pullback was shallow on Friday from the important resistance level. RMBS was heading toward the 1780 resistance level again. The buying near this level Monday was aggressive. After 1780 held the bid, we got long. See Figure 9.2 on your bonus material. When the bid held 85 cents, we got longer. When the bid held above 90 cents, we got even longer. RMBS traded up another point. Chop. We did not just rely on the charts to make decisions. We watched the order flow, used some fundamental analysis to weigh the new news in RMBS from Friday, and read our charts. Doing so allowed us to make chops on the short and long side trading RMBS on 2 separate days. When I write about reading the tape and learning how to trade, this is exactly what I mean. When I discuss developing trading skills to profit in any market, these are the skills that are necessary. Trading is not about making calls. Trading is not just about reading charts. Trading is about skill development such that you can trade a stock in play on either side. Just check out the trading in RMBS during these 2 trading days. How do I make money today? So, during our AM meeting, October 13, 2008, Steve highlighted Morgan Stanley as his stock of the day. Steve said, "I'm going to look for a pullback right on the open and then look for MS to trade in an uptrend for the day." Now, that is what I call a great call. On the previous Friday, Steve mentioned MS as a stock to watch. He remarked that MS might see 18 during the trading day. Yet another great call. Steve played MS on the short side on Friday and MS on the long side today. He made money shorting MS on Friday and long MS today. So did our head trader, G-Man, taught by us. I preach for our traders to be mentally agile. We preach for our traders to follow the intraday trend on almost all occasions. SMB teaches its new traders trading plays that allow them to make money short and long. When I was taught how to trade, we did not watch CNBC during the day. We did not trade with charts. We had no breaking news feed. We were taught to watch the stock and determine its direction. Some of the most profitable traders on our desk could tell you Derek Jeter's road batting average against right-handed pitchers on AstroTurf during the day. If you asked them the PE of eBay, they probably would return a blank stare. Now, obviously, times have changed. Charts, breaking news, and the backup vocals of CNBC is standard at most firms. But honestly, if you shut down my charts, turned off CNBC, and closed our breaking news feed, I could still make plenty of money trading. I am a trader. If the stock were strong for the day, I would chop it up. If the stock were weak, my results would be similar. I don't care where a stock is going for the day. A short on a Friday of MS from 18 to 1750 is the same as my long from 1871 to 1921 today. The first thing new traders can do to improve their results is stop pretending they have a feel for where a stock may go. It will take at least 3 years before you will be able to develop a feel just based on the news for where a stock may trade. Watch the stock and trade it. When it's strong, get long. When it's weak, get short. Your job is to make one good trade. Your job is not to make predictions. CNBC is not calling you up to make calls on the market or stocks. Leave your unbending biases and opinions at the door when you step onto the trading floor. Our trading floor is for traders. It's for those who can make money on either side. It's for traders who ask, "How do I make money today?" It's called trading. Each day into the close during the summer of 2009, our intern Kristen asked Steve to share a trading idea for our Twitter feed, which was shared with the StockTwits community of most interested traders. On June 19th, Steve told her that he would short Apple below 138, but would cover above 138.15. Apple had failed at the 138 level earlier in the day and had a significant down move. Steve was risking 15 cents to make potentially $1. About 15 minutes after he put on the short position, Apple began to hold the bid above 138.10. Steve covered his short and got long. Steve is somewhat reluctant to give our interns a trading idea each afternoon for Twitter because he recognizes that not everyone who follows our tweets is a professional trader who can capitalize on the important inflection points we identify. Brian Shannon, the leading momentum technical analysis expert in the trading blogosphere, shares these same concerns with his followers. The job of professional traders like Brian and Steve is to be mentally agile so that they can make money regardless of the direction of the market or the stock that they are trading. So when Apple traded above his stop price of 138.10 and the price action indicated it was probably going to trade higher, then Steve got long. Other factors Steve considered were that Apple had broken its intraday downtrend and it was trading above its afternoon high. Within a few minutes of getting long at 138.16, Apple traded up to 138.50, which had been a huge inflection point during the previous 2 weeks. Steve sold his long and, in fact, got short. Once he saw that an offer couldn't hold below 138.50, Steve covered his short. He got long again when the next upleg began. The next upleg was so powerful and on such heavy volume that I decided to hold 2,000 shares until the market closed. All of the evidence on his screen was indicating that there was a huge buyer that would not be satisfied until Apple traded through its morning high of 139.13. Apple traded up in the after hours at 139.75, and Steve was still long 1,000 shares. Chop. Another interesting point about the money Steve made long with Apple is that he probably would have missed the entire move if he hadn't been willing to take the short position at 138. Observing the price action in Apple while Steve was short gave him confidence to get long when it traded through his stop price. So the 15-cent loss he took on 1,600 shares allowed him to make about $1.50 on 2,000. I'll take that trade-off any day. Trading is not about making market calls and being reliant solely on the accuracy of your biases. Trading is also remaining mentally agile and quickly absorbing that the market is sending a clear signal for the next move in your stock. like today in Apple above 138.10. Amen Corner. Amen Corner often offers the most exciting holes of golf at the Masters. On April 9, 2009, 1825 in Wells Fargo & Company was our Amen Corner for WFC. There was an easy short below this level when WFC was in an intraday downtrend. There was an easy long when WFC held above this level when WFC was in an intraday uptrend. Let's discuss. As intraday traders, we must be mentally agile. I couldn't care less where WFC finishes. When WFC is in a downtrend, then I look for opportunities to short. I shorted some WFC at 19 when it was clearly in a downtrend. I shorted some more when WFC broke to downside after consolidation at 1850. I shorted some more when 1825 sold a massive amount of stock. But then WFC's pattern changed near 1750. The offers lifted quickly above 1750. I had not seen offers lift quickly the entire down move. Also, WFC stuck near the 1760 level and did not make a new low. I had not seen this during the entire down move, so I covered. When WFC traded to 18, I shorted again. But when WFC showed me its strength holding above 18, I flipped my position. I started a long position. When WFC traded easily through the huge 1825 resistance level, I added to my position. For the rest of the trading day, I bought into pullbacks, made the spread, and held my core long position. I was mentally agile. When WFC was weak, I was short. When WFC was strong, I was long. For those interested in an excellent book on technical analysis that teaches the new trader the importance of following the trend, read Brian Shannon's book. I utilized the principles that Brian teaches to trade WFC profitably on this trading day, though I can also not overlook the invaluable contribution that wearing my Masters polo shirt while trading that day must have had on my results. So the developing trader must learn to be mentally agile. Let's move on to another skill you won't learn anywhere but on a prop trading desk. Stay with it. Consistently profitable traders get shaken out and then find a way to get back into a good stock. Poor traders complain about getting shaken out. These lesser traders recall in detail how they were screwed. For example, I once had a conversation with a developing trader on our desk who got shaken out in Oshkosh. Developing trader: Look what happened in OSK, Bella. I got long above the 1880 level. OSK went to 19 and then had a sharp down move to 1867 where I hit the bottom. See figure 9.3 on your bonus material. What a screw job! Bella: Did you get back in when it pulled back to 19? Developing trader: No, I was done with it after that. Well, okay, he got screwed. So does everyone else. Are you special because you got screwed? Do you think I, or the market, has any sympathy? That is not the approach you should take. A good trader hits the bid during the shakeout and takes his loss. But then the solid trader buys OSK when it trades above 19 again. And then a winning trader buys more when OSK pulls back to 19. The consistently profitable trader takes a loss during the shakeout, but then catches OSK for a point-up move with 2 lots. And for those keeping score at home, that is a $2,000 gain minus a $250 loss. You can't ask for much better than that. A lesser trader's screw job is a consistently profitable trader's opportunity. Some traders will require a few failed trades before they catch the move. This is the game we have all chosen to play. It may take time to get on the right side of a trade. For the intraday trader, it is important to be on the right side of the stock and catch the move right before it happens. While easier said than done, there are reasons why this is true. Understanding exactly what should make your stock move will enable you to load up at a given moment, and then if your stock does not start acting as you expect, you can lighten up immediately. Jesse Livermore counseled, It isn't as important to buy as cheap as possible as it is to buy at the right time. Essentially, as an intraday prop trader, I am buying very cheap options all day long. I spot a stock that is trending. I find a great price to enter. And then often I can spot a catalyst that ought to make my stock trade higher and trade higher right now. I load up. Hence, I purchase my option to catch this stock if it explodes right at this moment. And if it does not immediately trade higher, then I lighten up. I scratch or make a small gain on the extra shares I have purchased. So in essence, if the stock was to explode, I would have been loaded and made a huge chop. But when it does not, then I get out for a small gain or maybe some small transaction cost losses. Golfers often talk about controlling their ball or controlling the direction and distance of their golf shots. As a trader, I want to be in control of my trades. I want to be loaded with protection in stocks that are trending up after I spot a catalyst. Spotting these catalysts helps me make more in a trade, limit my risk, improve my consistency, and lower my mental stress. Are you in control of your trades? If not, then you are probably not scoring well. On the long side, the best catalyst that we spot is called a held bid in an uptrending stock. When a bid is smacked quickly and for a significant size, and this bid does not drop, that is what we call a held bid. If the stock was not strong, the bid would have dropped and the buyer would have bought cheaper. When we spot a held bid for a stock in an uptrend, we then add size to our position and now expect an immediate up move. This held bid foreshadows a large market order more times than
markets, speculation,
and there are short-term shorts who are now caught on the wrong side who need to cover. We expect sellers to cover and the buyers
traders,
to step
how's
up
it going?
next.
Welcome back.
But
it's
there
Tessa
are a
here,
series of
bringing you
catalysts, not
episode
just the bread and
241,
butter held
which
bid
is
in an uptrending
unlike
stock.
any other.
And these
because
are
today,
different for the
Aaron
time
and I
period we are
have a
trading.
very raw,
But we must
fascinating,
understand
and
what
at
makes
times
our stocks
colorful
go up and
conversation
down so
with
we can add size at the
self-proclaimed
appropriate
Merc
moment
jerk
while minimizing
trading
our
vet
risk. Spotting
Jimmy
catalysts helps
Jude.
us control our
As we
risk.
rewind to the early 90s, Jimmy relives the rough and tumble of CME's euro-dollar trading pit. He shares with us about the power struggles, immense risk-taking, and wisdoms gained from his peers. Jimmy also recounts some of the more notable and chaotic events he's witnessed, such as being front row to an $8 billion blow-up in natural gas when trading on the NYMEX floor. Then to finish, I asked Jimmy a few things about his way of trading nowadays, trading the VIX curve structures and E-mini futures. Now, just a quick note before we get into it. If you're offended by a frequent use of the F-bomb or have kids in the car, then you're best to sit this one out. Otherwise, strap yourself in. Here's the one and only Jimmy Jude.
You know, from speaking with you the other day, it seems that like everywhere you go, chaos is sure to follow. And
Absolutely.
You did say that you've been dubbed the Forrest Gump of trading, which I found hilarious.
Right.
So let's go through some of those more chaotic moments from your past. And I guess just starting right from the get-go, it began when you entered the floor in 1993. I believe you were a clerk for First Continental Trading. So who was First Continental?
And First Continental Trading was like this quintessential Chicago floor trading prop firm. There was probably, back then, there was probably like 10 or 15 of them that like were really big and competed against each other. And most of them were like controlled by single wealthy fellas that either had made it big in the pit or had made it big in the markets in some fashion, you know. So Roger Carlson was the owner of First Continental Trading, and that's where I started. I mean, I really started in this business almost by accident. It was like, you know, I kind of like came into it ass backwards simply because I was like, you know, in the early 90s, the recession was so brutal. And it was like a real recession, not like this recession, you know, like people like lost jobs and it was hard to get a job. You know, I got out of college and you couldn't get a job anywhere. So, you I was doing like horrendous menial labor, like really embarrassing shit, for a college graduate. And my roommate called me, an old college roommate called me that had gone on the floor in Chicago and was like, dude, you got to get out here. You got to see this. Like, this is perfect for you. So, I went out there and I got in and he got me a clerking job or a runner job, at First Continental. I started like at the bottom, but I immediately, soon as I saw it, I was like, oh yeah, this is for me. This is perfect, and I don't know, what like quality, like personally, like, most of the traders that I know and most of the people that I've hung out on the floor, they all have like a certain quality of like mental illness about them. Like, and it doesn't have to be like horrible mental illness, but like, like you would, like, I used to walk by a guy working in a cubicle and be like, holy fuck, I can't even imagine being that human. Like, what is he doing in that cubicle all day long? Like, I need to be doing like 85 different things at once in order for my active mind not to like freak out. And trading in the floor and markets and stuff was like perfect for me. It was like immediately I knew. I was like, oh God, all those like horrendous thoughts like went away because you're just so busy, and everyone I met at like First Continental and everyone I met on the floor were very like-minded like that. Like most traders are like that, right? They you need to be like, you can't just be looking at a chart. You have to be looking at a chart. You have to be listening to this. You have to be like, you have to be doing like 85 things in order for your brain to like calculate everything, you know?
You said the name Roger Carlson, the founder of the firm.
Yeah.
I heard you talking just very briefly about him on Anthony Crudele's podcast. And I think you said that he was like a lunatic with risk. He just really wanted you to hit the gas.
Yeah.
I would love to hear a bit more about that. Like, do you have an example?
That was the amazing thing about like where I ended up. So like, I get plopped into First Continental, not knowing anything about markets, not knowing, anything about anything. And here's this like owner of this company that like, the guy's a complete maverick. He doesn't give a shit whether you came from MIT. He doesn't give a shit. He knew like the complexion of traders. Wasn't they didn't necessarily come from Ivy League schools at that point. And he was willing to like take shots on guys, and he let you go balls to the wall. This guy, like there was no risk that he wasn't completely comfortable with. And every one of his traders traded big and were encouraged to trade big. Like if you weren't there to trade really big, he didn't even want to know you. It was like, fuck off, So like if he saw something in you that he knew you were, you could handle that type of shit, you knew like at least you had a shot.
Did that come natural for you to trade really big? And when you say trading really big, are these like calculated risks, or is this almost like borderline relentless? Sorry, what's the word I'm looking for here? Reckless. Is this like borderline reckless risk taking?
No, it wasn't he wasn't looking for reckless risk taking. He was looking for guys, that developed themselves into traders and then had the balls to hit the gas. He didn't have patience for the guys that were like, I've developed this, and like there's a lot of guys out there that are super consistent, but they don't make shit, and because they don't have like they don't and as I don't know, as archaic as it sounds, they just don't have like the guts or the balls to do it, So he was always looking for those guys that had like those intangible qualities.
And was that natural for you?
It was in the beginning. Yeah, it was. Like when I was, 24 years old, 25, I was trading absurd size in the Eurodollar option pit. And I didn't even really understand like what, it was just because I I started trading huge. I didn't like nothing. I was desensitized by the numbers like immediately. So it really didn't matter to me. I would do a trade and it would immediately be a $75,000 loser and blow, and my boss would turn to me and be like, "You're a fucking idiot. Like, what the fuck's wrong with you? You just cost us 75 grand, like, what the fuck? You don't even own a car and you're costing us that kind of money. You know what I mean? Like it was just an interesting moment in time, and he was right because before I was trading on the floor, I was like a penniless hippie living in Boulder, Colorado as a ski bum, So like these numbers were like jarring to me in a way, but in another way, I was just playing this like big giant math game that like who could get the highest score type of thing when I was on the floor in the beginning.
So how would you define, I mean, trading the floor attracts a certain type of, personality or mindset, and how would you define that type of mindset?
Well, you definitely had to be tough, like you have to, be beyond tough. And they weed out people, because you're going to have to clerk for 2 years before you go into the pit. And these guys just throw the worst amount of shit on your head, and what's funny is like a lot of traders that I see on like Twitter and stuff now, these guys have all gotten so soft, they're like any type of like issue in their life or any type of issue in trading or the markets, they're crying, when back in, the old school days, like there was no crying. Like you clerked and these guys shit on you and you clerked for pennies. And if you could, and you needed to take that like absolute constant ridicule and ball busting just to be able to be considered to make it to a trader in the pit, because they knew like, listen, if you can't take that, you're not going to be able to take this next round of shit. And they were right, because in reality, the pressure to make money is like the greatest pressure of them all. Like you could think of like, oh, it's a pressure. I got my boss is giving me this pressure. Like you can all these little things like, yeah, they're terrible and everything to deal with. But like when they put you in the pit and it's like, okay, dude, let's see it, make money. That is like, that makes all that other shit pale in comparison when it comes to stress.
Is there a certain higher level of satisfaction when you were trading on the floor back then that you can't really get with, trading the way traders trade now electronically or, by yourself?
Yeah, there was like that, there was the fact that I was standing in the middle of a pit of 100 guys and we were all like exchanging, body blows to each other and fucking with each other. And when you were right on a trade, you got to get in the guy's face that like, so, took the other side to it and bust his balls and fuck with them. And, there's like all of that, but, like in reality, like I see a lot of that on Twitter now. I feel like Twitter is almost like the pit of the world, in these markets, because you see these guys just like, difference of opinion, slamming each other, like that's the way the pits were. And it was actually great, not only did you have to be a competitive person to make it in the pit, period, but you have to be a competitive person to make it in the markets, and you want to be that guy. You want to be the guy that talks shit. You want to be the guy that looks at the asshole that just hit your market and told you you're a fucking asshole, you're a moron, and then you were right. You know what I mean? That's one of the most wonderful feelings of trading, other than the money. I mean, the money's great too, but I like being right too.
When I interviewed Chris Caddy a couple of episodes back, and I feel like some people are going to hear his episode and then they're going to hear this episode and be like, these are two very different points of view. Mm-hmm. Chris almost made it sound like the pit was almost like a gentleman's affair kind of thing. Like he spoke of professional courtesy and that type of thing. I don't hear any of that from you.
Oh, no.
The Eurodollar options pit, was that possibly a more aggressive pit than some of the others that were around.
Fuck. The Eurodollar options pit, like I traded from 94 to 04 in there. That pit was the baddest ass pit on the planet. It had hands down the greatest traders and guys that would like take down banks that were sitting in there. You know, like it was incredible. Plus the time of trading from 94 to 04, you know, and rates, and it was like the golden age of like, you know, the Fed and, you know, before any of this QE or any of that bullshit happened. But with all these personalities that were in that pit, they were so fucking good. And these guys were making so much money. I mean, think about it. There was probably 40 guys in that pit that were making like 10 million bucks a year. You know, those are strong personalities. No one's backing down to anyone. You know, no one is like, and no one is, there's no mercy. So like, you're a new trader in that pit, you walk in there, they're immediately bludgeoning you. You know, so this was not a gentleman's game. I've been to, I know what you're talking about. Like I remember being on the New York Stock Exchange. There's different exchange floors that have like different rules, but like this was, you know, that was not the case on the Chicago floor. This was, I mean, you could get your ass kicked. You like, if you talk, you talk to the wrong person, you're getting punched in the face, you know, and that's like, I remember having to wear sneakers or gym shoes, whatever, one day. And my wife's like, why are you wearing gym shoes? You look like a fucking idiot in those pants. I'm like, oh, because I think this guy's going to attack me like on the open. Like I'm going to make a market and he's going to immediately fight me. She's like, what the fuck, dude? You know, she's like, that's so fucked up that you have to deal with that at work. But you know what? I actually liked it. You know what I mean? I liked the fact that I was going to go in there and maybe get into a fist fight. Like that's, you know, you have to have that type of personality.
Yeah, it sounds like you're a great match for the floor. And you make it sound like it was just complete anarchy.
Yeah, absolutely. I loved it. And you know what? You know what's funny is like people are like, I used to, the floor was great because like they would send guys in, especially into the Eurodollar option pit. There was so much money going in there, and it was such a the market was a difficult market to trade. You know, you had like major players in there, like we've spoken about. You know, Don Wilson was in there. You know, you had like it was a difficult place to trade, and people used to like personally, like I grew up with an Italian mother from Newark and an Irish father from Boston who was like a FBI agent. Like my home life was an absolute fucking like chaos the entire time. They were screaming at each other. He was drinking, you know what I mean? Like when I got to the pit, it wasn't really that much different for me. And like they would be sending in these guys from like the National Honor Society that like graduated from MIT and they'd be standing next to me, and, you know, the brokers would be screaming at them, you fucking moron, that market sucked, like, what the fuck are you, you know, and these guys would just stand there like, and I could see them melting because they had never heard that type of language before, you know, but me, that was like that. I was like, all right, this seems like home. You know, whatever.
You mentioned trading with or trading on the same floor with Margie Teller. You know, one of the very few dominant female floor traders of the time. How is it trading on the same floor with her?
Well, you know what? Like, I actually we went a step further. Like after the floor, Margie and I we tried to start a hedge fund together, we got a little bit into it, but there was a lot of people involved and a lot of conflicting personalities. So it never really got to where I would have loved it to get to. But I got to hang out with Margie in a really intimate way. You know, like, you know, I got to hang out at her crib, you know, and exchange war stories with her, and, you know, drink in her kitchen, and just like, you know, she's such a cool lady and she's so fucking intense. And like the entire time I was in her presence, I was extremely intimidated, just because like just her eyes and the way she talks, like she's just a different human being. Plus I know how fucking smart she is. And I know the combination, like when she when she was telling me like different, I would ask her questions, like what was the biggest shit show you ever got involved in? What was the worst position? How did you get out of it? Type of stuff. And she would describe these positions that she was in and how she got out. And it was just like she, not only was she like a mathematical genius, and not only could she see the entire board in ways that no one could see it. She could see it like an algo. She like her brain is an algo, but she also had like it there, that she had that like intestinal fortitude to execute for size. Like she would, and she, one of the things that like I remember getting from her, because you always get these like from older people like, hey, don't, the trend is your friend, don't fade this and that, and I remember asking her like, what's your favorite trade? Like what's your like wheelhouse trade? When you see it, you just fucking hammer it like thousands of times. And she was like, oh, I love like fading. I love fading like big moves, like big spikes, either up or down, like. And I'm like, really? Like, I've always been told, like, never fade. Don't do that. Trend is your friend. Like, stay out of the market. You see that shit, whatever. And she's like, fuck that. That's where you make your money. She's like, she's like, what? Think about it. I can come in on the bottom of that spike and buy the fuck out of everything and have literally 1,000 guys caught and then do my work for me. She's like, and all I have to do is have the balls and the size and the knowledge to, hit it where I want to hit it. And it's like, when she said that to me, I was like, wow, a lot of these like trading,
mantras.
Like, that we hear,
Wisdoms.
they don't. It doesn't apply for everyone. It does, like you can't just, like I get it. The trend is your friend and don't, fading, you get fucked. Or, I also know another guy that I worked with who was fantastically wealthy, dragged 40 million out of the Eurodollar pit, that loved to average. Not only did he love to average, he loved to martingale. This fucking lunatic would like, he would just keep going in. And at the end, he would just like drop a bomb you know what I mean? Like he would get bigger as he fucking averaged in. And it worked for him. Like he was like, well, there's, you just got to have deep pockets. And there comes a point where, where people will break and this and that. And like, so there's no like all these rules. If anything, my experience has told me, has taught me that, they're flexible at best.
Tessa asked you about Margie Teller there. Was she in the Eurodollar options pit with you?
No, she was in the back months. She was like all the way across the pit. She traded like rates from like basically 2 years out. Or she probably traded the whole curve, but whatever. But she traded heavily from rates like 2 years out to like 5 years out. That like red, green, blue, purple part of the Eurodollar curve, which is extremely difficult to trade. Especially she was just buried in this deep pit with no computers and, all she could look up at is a pricing board and just work the orders that are around her, and yet still, be 50,000 up. And I mean, she's special.
Yeah. You also mentioned Don Wilson. Don is someone who I've made several attempts to bring on the podcast. That would just be fantastic if I could get him on. But what was it like to be trading in the same pit as Don Wilson during the 90s there when, DRW was nothing like what it's become nowadays?
Yeah, when it was
the early days.
It was like 12 guys. I literally, like it was 12 guys. And it was great because, in the beginning, when I first went into the pit, he wasn't there right away. He was in London developing like a London office. And so I was like, when I went in the pit, I traded for a year without him in that pit. And I was under the impression that like you just lost your shit anytime anything went against you because my boss behaved that way. And a lot of people behave that way in the pit, And then like Wilson came in the pit and started, and I moved my spot to like right over next to him. Just by chance, someone left our group and I got this spot and I was standing next to him. So he comes in and I just know him as like, at that point, he's just like this dude that like got down there super young. Like the guy graduated college at like, I don't know, 19 or whatever, and was trading, he was on the floor at like 20, and that's all I knew about this guy. So, but the first thing I saw from him is that like, no matter, like he was trading huge, and B, he was unshakable. Like he would never lose his shit. Like even like when shit was going against him, and like, he was just like completely under control. And I was like, wow, I'm doing this wrong. Like my mentor's a fucking moron. Look at this guy. This guy's fucking, this is the way to do it. So I started like learning from him incrementally like that, just to like, just the way he behaved under pressure. But then I grew close to him, and obviously, you're standing shoulder to shoulder for, 5 years. You start talking, and we forged this a pretty solid friendship. As much as a friendship as a guy like that can have, because like he is a unique individual. He is so fucking smart. He's hard to talk to. He's socially retarded. He's like, he's got all like, even when he was like telling me he's, I'm getting married, I'm having kids and everything. And I'm like, God bless your wife, but like, the guy works like 24/7. He's never home. Like he's a driven individual. He's one of those beasts that like, I knew he was going to be a fucking billionaire when the guy was like in his 20s and he, had 5 guys working for him. We all knew it. He was just like, he had that intangible quality, and he was like, just the way the guy, there's like 3 people that I know that can work a pricing board, and just put 4 people, I would say, that could work a pricing board and put combinations together that like, and you just can't beat them in any fashion. And that would be like Don Wilson, Margie Teller, and who's the guy from the Nat Gas? Arnold. What's his name? John Arnold. Do you know John Arnold?
No, it doesn't ring a bell.
No, he's a guy like after I traded for 10 years in that pit, I went over. I switched over in New York and went and traded natural gas. And watching John Arnold trade the board in natural gas was like a freak of nature too. Like just mathematical geniuses that could put together like puzzles that I even to this day I don't know if like I know people have all programmed the computers and the spreads to do what they used to do mentally, but I still believe they could beat those computers to markets just because they could synthesize information faster.
Yeah. Someone who wasn't such a genius, but who I've heard you speak about on the Market Huddle podcast with Kevin Muir is a gentleman by the name of Chad. Who I think you may have described as a pot-smoking degenerate.
Yeah.
But from the way you were talking about him, even though you did call him a pot-smoking degenerate, it sounded as though there was something which you actually quite admired about him. Who was Chad, and what did you like about his style, if you will?
Like Chad, or I could say like the Chads that I've met in my like trading career are just those like, it's that guy, like first of all, you have to be smart. You have to know what you're doing. You have to, you have to be a good trader. You have to, all of that shit. I'm not just saying like, just being a pot smoking degenerate is going to be helpful in your trading. No, you have to be like you have to know your shit. But like the Chads and the Chad story was the point of it was like, I've met these dudes in trading that they're just so fucking laid back, and they're so chill, and they can sit there and they can watch the market and buy their time and wait for that one moment and then slam it for huge size, drag their money out and walk away. And it's like the reason, I think the reason I originally had like told the Chad story is like it's not who you think it is. Chad wasn't disciplined in his life. He was, he played video games and smoked pot all day long, but he was disciplined in his trading. So it's like, it's such an interesting, fact that like a lot of these guys that I've seen that are so fucking good, they have that quality where they just don't sweat the small stuff, and I think that's like, one of the, since I've seen so many really good traders, that's probably the greatest thing that my career that's ever happened to me in my career, is being able to be so close to so many good traders and really see how they do it and everything. And I realize they all, if there's one quality that they all have in common, is that they don't freak out. They take it all in stride. They're all super even keeled. It's hard to put into words, but it's like, they're unflappable, and it doesn't, and you don't have to be like macho, like some macho asshole, and you don't have to be a man, and you don't have to be some weightlifting dude to be that. It's a mental thing. It's not,
Mm-hmm.
and a lot of people confuse that. But all these people that I'm talking about, like Chad, Doogie, all these guys, these guys this was all mental, but they could make grown men that were on steroids cry, which was great to see. You know what I mean? And that was their difference.
I'd love to flesh out some of the more chaotic moments. I mean, all of your story so far has been fairly chaotic, but I know there's been some specific events.
Yeah.
First of all, though, before we move off this, we've kind of been talking about some of your peers or some of the people you've been trading with over the years.
Mm-hmm.
Just a quick question. Is there anything that just jumps to the front of your mind when I ask you about any of the bold or brazen kind of trading mantras or philosophies that you remember some of the old heads saying to you? You said before, a lot of the trading wisdoms that you hear are, they serve a purpose, but there's a lot of people who do the complete opposite and make huge amounts of money.
Right.
Are there any kind of one-liners or little quotes that you can recall from?
Well, I know I tweeted this out, so it's repetitive, but the one, there were tons of them in the pit from the older guys, and I try to I tweet them out so I can remember them and I don't forget them, but the one that was so great that I remember was when I had finally jumped on the train, in the natural gas during Katrina, and it was really hard to get on that train. When the market's moving that fast, the bid and offer is really wide, and it's just so hard to get on, you know what I mean, without ending up under the wheels. And I got on the train, and then I immediately offered everything I had, 70 cents higher, and it was holy shit, and the old man next to me grabbed me, and he was like, hey. He's like, listen, if you're taking the train to California, you don't get off in Chicago. All right. And squeezed my arm. And it was little sayings like that where I was like, oh man, he's right. What the fuck? It's so I waited all day to get in this market. I'm on this train. It's going in one direction. Don't just trade your P&L. Don't be like, oh, that's enough money that
Yeah.
That would be a great win. You know what I mean? Like things like that. I get, and you know, I got to constantly hear about stuff, little things like that. You know what? I used to hear about most of the greatest stuff is over at the CQG machines on the floor, because that's where all the old men would gather, and they would all be looking at charts, and all the young guys would, you know, be in the pit like fighting each other and like screaming, you know, and all the old farts would be over at the CQG, and that's where I would learn like all like the old stuff, the really good stuff.
Okay. Yeah, I love that one. That's going to stick in my mind, I think. The the train quote there. So chaotic events or moments from your career.
Yeah.
I know when we caught up the other day, you mentioned something about you were in the pit when a guy by the name of Brian Hunter, I don't really know this story, but apparently he was huge. He blew up $8-9 billion or something. You were there at the time.
That's like part of the Forrest Gump fable where I, you know, I mean, like the Grim Reaper wherever I go. Because I was like, you know, in the beginning, I blew out a couple of times in the Eurodollar option pit. The second time I blew out was on the Millennial Fly, which is a whole weird story, anyways. But you know, and then I. You know, I did finally migrate over to the natural gas, and I went over there really to trade Katrina at the time, because you couldn't get to the physical contract unless you like were in the pit. Okay, everything else was like financially settled. It was like ICE and stuff like that contracts. And as soon as I get over there, I trade Katrina. We trade it really well. We make a bunch of money, and next thing you know, boom. The Brian Hunter blow up happens, and I had like a first row seat for that. And I had seen blow ups before, like I had even seen massive blow ups. I had watched Long Term Capital blow up, and you know, but I have never seen like I knew it was one individual that was fucked, because we all found out like immediately like why, you know, like this guy was screwed, and then the sharks came in, and that's when like guys like John Arnold came in, and I was kind of standing between the broker for John Arnold and Brian Hunter, and they were exchanging body shots where like in parts of the pricing curve where you didn't even think like anyone had positions on, like it was like completely illiquid parts of the curve, and they would like ask for like a calendar strip, and you know, and they would do 17,000 of them, like boom, 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 you know, and you're thinking to yourself like, holy fuck, 17,000 of those cal strips, like at this price, like if this guy just puked, that's $1 billion worth, you know, like the money, I have never seen a guy lose that amount of money so quickly and another man destroy him so brutally, because John Arnold like I knew he was on the ropes and just like absolutely made this guy puke at the fucking worst prices, and his pukes were like scary. I was too afraid to even enter the market, because the bid and ask for most of the market at when things were getting so crazy, you know, the bid and ask could blow you out.
Yeah.
You know, so it was like, I was like, fuck this. I'm standing here. This is an incredible moment to watch, you know, one man take $8 billion from another man in a very short amount of time. And it was fucking, you know, that.
So was this Brian Hunter? Was he a floor trader?
No, he was in like Calgary. He was trading for a hedge fund called Amaranth, and he was in Calgary in like a remote office. And you know what's great is he was fucking the real part of the story is like Brian Hunter was killing it. He had made like $2 billion trading natural gas the year before he blew out, and this hedge fund Amaranth, like he was so fucking good at trading natural gas and was making so much money. Amaranth, like, you know, very quietly was like, here, just keep going, you know, like he was the best thing they had going. You know what I mean? Like they were no longer a hedge fund. They were just, $8 billion or $9 billion under management with one lunatic going fucking crazy in the natural gas and their numbers looking fantastic, until
it didn't.
Until he ran it. Right.
What about the GFC in 2008? Was there anything mad that happened during that time outside of the, chaos that we know?
The thing I remember about the GFC is it happened late. Like, I thought it was going to happen. I figured that would happen in 2005 with the way things were going, but if there's anything that I can draw about that, I was trading natural gas and crude oil at the time and commuting into New York City from Southern Connecticut. And if there's anything that I draw from that moment is that the train going into the city was standing room only in July of 2008. And then by the end of September of 2008, the train was basically empty going into the city.
Man.
So the thing that I drew from it was shit can happen, shit can go south real quick, and even right now, when I look at the moment that we're in right now, it's an extremely tenable situation. And people are everything's not that bad, look at employment, look at this. But I just know that yes, we could be fine. Everything could be cool. We could get a soft landing. But I just know if 2008 taught me anything, because I saw it, is how fucking fast you can go from being okay to being not okay. In this economy, in this world, and in these markets.
You briefly mentioned that there's been a few times in your career where you've kind of blown up. And I don't know to what extent that has been a true blow up, the first thing that comes to mind for most people when you hear blow up is you lose the lot. I don't know if that's been the case, but I know there's been several times through your career that you've taken huge hits.
Yeah.
What were these points and what caused it to happen? Was it, a factor of being too aggressive?
Yeah, the first one, I blew out really kind of near that 97 Asian ruble shit show. It was just one too many body blows after another. And I was just short premium, and I was a new trader, and I just thought selling options was the greatest fucking thing in the world. I couldn't believe why anyone would ever buy an option, and which was a great lesson learned, There's an art to everything. There's an art to selling options. There's an art to buying options. There's an art, but I was that blow up was just pure ignorance, inexperience, stupidity, making millions of dollars being short options for 2 years and then losing it all in a short amount of time, and people say that stuff about option sellers, they make money every day, every week, every month, and then they lose it all. And, and that's true. I got to experience that. So that was that. My second blow up, and my first blow ups were massive. We're talking, millions of dollars, and me being young. So it was difficult. It was difficult psychologically, and it was difficult because I was losing millions of dollars and having to speak to grown men that were 20 years older than me and explain to them why I was losing millions of dollars. It was just difficult. I was 26 years old. I didn't know what I was doing, and it was tough. The second blowout, again, which was big money, was the Millennial Fly in '99, which that one was, if it was my fault, it was because I didn't react quick enough. It happened in December.
Can I just jump in there? What is the Millennial Fly?
It was it's you can the listeners can Google it and kind of get a better idea about it. But I'll try to flesh it out in the most simplistic way. It was really it was a play around rates around the millennial. people started getting nervous about a year out that like there was going to be all sorts of financial, chaos.
Are you talking about
around
the Y2K?
The Y2K thing, that
right.
The computers were going to cause this, yes. And this was going to cause, and all of a sudden this like blew into the Eurodollar curve as if this was going to cause like a disturbance in the rates. The Fed was going to have to like move on this, you know what I mean? Now, this was all just like complete conjecture. It was all bullshit and everything, But the problem is like I had these fucking massive positions going into December, which was stupid. That was another thing I learned off blowing out here. Shore it up. Don't have positions in December. Fucked up shit can happen. People aren't trading. There's, you know what I mean? There's less liquidity, So all of a sudden, like this butterfly, which was in the red part of the Eurodollar curve, starts to like invert in a way that was historically, like, I was taught it was impossible. And then vol in the Eurodollar option pit started like stuff that had like further out, stuff that, the straddle from December of the like when Y2K was going to happen, when everyone was worried, that thing started trading like above all its neighbors, even shit that had like further out time dated options. It was stuff that like I was told was impossible. Like this didn't happen. This was mathematically impossible for this straddle to trade over that because this one has 3 months and this, there's time decay. But here there I was, blowing up right before Christmas, which was nice.
What a way to end the year.
Yeah. And it was funny. I was just about to get married and I was this cocky prick too. And I was like shopping for like new Range Rovers and I was making all this money and I fucking blew up so hard on this Millennial Fly. I was shopping for like Range Rovers and like talking to the guy about like being like a little bit miffed that I couldn't get like the interior and the color I wanted, to like in January, I was like looking for used Jeep Cherokees, like, you know what I mean? Like, but it's that type of shit that's happened to me. And at the time it sucks, it's brutal, but it's made me better. It's made me bulletproof in the long run because, like, I don't know about other people, but it feels like, I feel like I need to learn every lesson the hard way. So, and I have, and the market's more than willing to do that for you.
Jimmy, the next few questions I wanted to ask would probably lead us into your trading approach. When you were trading in the pit, you traded mostly big. Is it hard to trade smaller once you've traded big? How do you trade right now? Like, is there structure to your trading now, or do some of the habits that you learned from trading on the floor, are they still carried with you today?
A lot of the stuff that I learned in the pits, it's like the big picture stuff that I still carry with me. When I left the pits, I went to an electronic trading firm called International Trading Group in 2005. And what I learned there is probably more applicable to how I trade now, just because it was, like when I converted to electronic and stuff like that, like those little like minute nuances of all these little different markets electronically, that had to be like relearned. That was not pit stuff. I was like a babe in the woods when I got out of the pit and made that transition. I was just as, green as the fucking next guy. I did know like the main drivers of stuff. So I didn't have to think about the way to react to, the market when it was reacting to live, whether it was an economic number or whatever. Like I had that part of the pit always carried with me. I was very good, like at being able to react. But but like the electronic side, like that's difficult. I still think I'm a student of the electronic side. Like I'm never going to feel completely comfortable. Like I always feel like I can learn more. I always feel like there's a little bit of something I need to know.
Are you trading alone mostly now, or with other people?
I trade alone now. Financially, I'm on my own accounts. I trade with people, like-minded individuals that I like, either have like guys I've been hanging out with for years, guys I met in New York, guys I met in Chicago, so we share ideas and stuff like that. And I share a lot of ideas on Twitter with I DM a lot of guys, and, I love, one of the greatest things about the pit was like, I had a guy that was standing, within 5 feet of me. I had 15 guys, and one guy was like always right. One guy was always wrong. One guy was always early. One guy was late. One guy was a pussy. One guy was too aggressive. So I got to watch like all these assholes and how they like reacted to the market, and like be able to be like, okay, the guy that's always early is doing this. The guys that, so, and that was huge. That helped me like make my decisions. Now, I use Twitter that way now, and I use social media that way. In the same respect, like I watch these guys and I study them, especially the guys that have like, the guys that that are like slinging it. That there's guys on Twitter that are just full of shit and they're just fucking chumps. But then there's guys that that are working it. And so I use a combination of peeps that I know that have skin in the game and veterans that I've been trading with for years to talk this shit through. But I am alone.
Right, and you mentioned a lot about in your trading strategy today. Looking at the VIX curve and E-mini futures. I could be wrong, but personally, I think the vast majority of traders maybe don't really trade complex strategies and structures, especially beginner retail traders. But do you think that there are opportunities for smaller retail traders and investors to play this volatility game? Or
absolutely, absolutely, for sure. And you know what? Like they can and. The way I play it, they could play it. I always break down, like I usually start with really complex ideas and then I break them down to the most simplistic ways I can execute the trade. And I'm always trying to simplify things. So like my VIX trade, the way I trade the VIX, like my idea is like, and this, and I'm sure, whenever you talk about volatility products, you're always going to have like 50 people come in and tell you you're a fucking moron and you're looking at it wrong because everyone's a fucking genius that trades vol, But, the way I look at the VIX is kind of like the Colorado River, like all the tributaries, like, flow into it. And it's hard to hide, like, it's hard to hide vol in the VIX curve. You almost can't, like you can hide, you can push skews in one market in this way or that way. But like the VIX is just, it's kind of like everything dumping into one thing. And that's why I love it, because I feel like I'm seeing everything. I'm not seeing like one little, like if I'm just watching like some little skew and some like EW option or whatever, like maybe that's just some fucking, maybe that's just a one thing, one off. But like the VIX is not a one-off thing. But I've broken it down basically to trade the spreads and to just trade the shape of the actual curve or what they call the term structure a lot of the time, and to trade it against ES levels. And a lot of the times you can either be very active in it if you want, or you can just wait for extremes. But either way, and you know what, like I've taught a couple of guys how to do it. When people ask, I leave breadcrumbs around the trade. The fact of the matter is I'm not a trade educator. It doesn't behoove me to like teach everybody my fucking trade. You know what I mean? I don't want, like then it's a crowded trade. Like I just, like I'm trying to give a little bit of experience to people, like show them, like lead them. Hey, this is where you look. This is where this is what to, put some breadcrumbs out there, and then you do your own thing and you come to your own conclusions. And the fact of the matter is like, there's a lot of guys out there that are smart enough to ask me really smart questions on Twitter. And those are the guys that like I hook up with on DM, because I know that they're really close to understanding and getting it. And then, I'll work with those guys, but I just don't have the time to like, nor do I care to, teach everybody this trade.
Yeah. And you're busy trading, right?
Right. And I'm trading. That's the other thing,
right?
Like that's the fucked up thing that you see on social media is like all these people are like constantly like, look at my trade, look at how great my trade is, like, yeah, like, hey, and you're like, all right, dude. So when does the subservice start? You're like, I'm not that guy. I don't give a shit. I'm not starting a subservice. I don't want to do one. I'm a fucking trader, and I always have been. So I'll disseminate my information the way I want to. Because I'm not looking to monetize it that way.
Yeah. Really quickly back to that volatility play. I guess is there a retail product do you know of that allows a trader to play the volatility without having to go into options or futures?
Yeah.
For example, because with options,
trade,
there's
though,
that. Yeah.
Yeah. This trade, like when you're trading the VIX curve versus, whether it's, E-mini futures, yeah, that or EW options, this is a little bit, this isn't retail. Yeah, I mean, it is, you can open an account with probably 50 grand and get these products and start like trading them. But this is a little more advanced than that. The thing that I would say to retail is that you don't even have to trade this. You can learn it and you can watch it, and it can help you in your other trading. If you just want to be a futures trader, if you just want, or maybe you have like, I don't know, $1,000, $10,000 in an account, and you're like, this, just watching that VIX curve and learning those VIX spreads and learning the butterflies and how they react, that's going to help you in your trading anyways, because they're coming there first. Mm-hmm. So if that doesn't, they always hit the vol products first. So those are the tea leaves you want to be watching. Now, if you want to take it a step further and trade it, it's a little, it's not an ETF. It's not a Charles Schwab account type thing. It's a little bit more intense,
Yeah. That's helpful.
It's not impossible though. It's, right. It's like an interactive brokers. It's not impossible to do, and you can do it small, but it's more intense than an ETF. You know what I mean? There's nothing out there that really captures this like that.
Something that you mentioned, I heard in on another podcast, and I thought it was really something that I want to keep in mind. I'm going to quote you. You said, "Stay in the game when it's lame and be able to be there when it's killer." Tell us about, having the mental strength to stay in this game. How did you get it? And what's kept you in the game for so long, for 30 plus years? And how do you do it?
Well, first of all, I love it. You got to love it. And I mean, you don't have to, it's a fucking nightmare. And as well, obviously trading, is a wide range of emotions, but base case, you have to love it. And I love it. And I love figuring it out. I love like, there's always that consensus, and then there's that like second derivative thinking, and then there's that like third and fourth derivative thinking that where like you catch everyone off on the wrong side of the boat, and like it's that type of like that just like I'm a competitive person. I love playing that game every day. I love being able to keep score. I love being able to see my score at the end of the day. Like I just love it. It speaks to my brain.
It's the challenge, right?
Yeah, totally. And that's why there was always a lot of athletes on the floor, like these guys like to compete. They wanted to fucking win, I'm no different. Like I love that shit, and so I need it.
You love it, but you know what? We can love it, but it could be so stressful. So how do you balance trading and taking care of yourself mentally, physically, emotionally, spiritually? How do you do that?
Well, that was the other thing is like, as much as mentors have taught me how to like trade or they've taught me how to like live too. Like my favorite mentors have been like these guys that have like traded mind-boggling size, bigger than I've even traded. And they're like, their entire life is just like silliness and like gallows humor, and like they just like, and when I see that, I'm like, all right, I like that was the most wonderful thing to like, like you don't have to be a stressed out asshole 24/7 because, this is what you've chosen to do. Like when this shuts off, I'm as stupid and as ridiculous as, like I almost, like my children say to me like, Dad, you almost can't be in most social situations. And it's true. I'm not really an adult. Like they used to say on the floor that you stopped progressing emotionally or soon as you got on the floor. And I got on the floor at 24 years old. So I'm like extremely mature and goofy. And like, that's how I handle the stress. Like I need to laugh. I need to make fun of it. I can't be the guy that's like, oh, I'm this is stressful. I'm taking all this risk. Everyone shut the fuck up around me. I have this risk on, like that's so fucking lame, And I've met dudes like, like I worked with this guy, Ken Alpart, who was like one of the greatest traders I've ever been in the presence of. And he would do like, as he was taking like, he would be like hitting like 1,000 VIX spreads. And then he would like tell like this goofy story about how his mother stunk up the bathroom, at his place this weekend. Like there was never any consistency. Like, and I realized like, holy shit, that's how he's dealing with it. That's how these, what I mean? He's dealing with like that mind numbing stress by like being funny and being silly. Like you can't, and that's, and I've adopted that. Like and you see me on Twitter, like most of the times I'm saying something funny on Twitter, it's usually because I have a position up my ass and I'm getting murdered and I'm just trying to bring some like,
I was waiting for you to say that you take off down the beach on a motorized bike.
I do that too, actually, a lot.
I have one more question. To those who are on the fence about going into trading these days, or maybe even a bit intimidated by it, what would you say?
I would say trading is first of all, you've never had more tools at your disposal for free or extremely cheap. So like if the bug bites you, go into it. There's so much you can learn. You can do it. You can become a trader. You can make like you could open up a small ninja trader account and trade a few micros a day here and there and make $50, $100 a day or whatever. You know what I mean? Like there's so many different like ways you can do it now. Like back when I started, it was all balls in or out. You know what I mean? You either had to get a job go through some brutal interviews, and then you had to get your balls busted for 2 years while making no money. Like the barrier to access markets now is so low. I say go for it, but don't do it thinking you're going to be like, oh, this is I'm going to trade the rest for my living. I'm going to be able to live anywhere and all that bullshit. Like if you go into like you're going to fail. Okay. Trading is a part-time job for a new retail trader. Okay, treat it like a part-time job. All right, it's there for you. It's accessible. It's possible. I'm telling you, it's possible. But you better have another job. You better have other avenues for revenue, and in reality, like even me now today, at my age, like I need other avenues of revenue, like to free me up mentally to trade,
Takes
like
the pressure. Takes
yeah,
the pressure
you don't
off.
like, yeah. So I would say to the new retail person, like, yes, you absolutely can do it. It's all there. There's so many learning products. It's, there's so many pods, dudes talking about it. You've never had this much information, but it's difficult, and you have a much better shot if you don't, put all your eggs in one basket and think about it as a career, as opposed to, you can think of it as a career later on after you're doing well, after you've had a couple solid years tinkering. But in the beginning, don't kid yourself. Don't have a couple good, 2 good months and start doing the math over the next 10 years and think you're all right. Because everyone does that, and they all.
All right, let's wrap this show up. Jimmy, this has been
All right.
truly epic, man. Thank you very much for coming on the podcast. You're one hell of a storyteller, and I cannot wait for your book to come out. Is there a ETA on when it might drop?
I'm like right in the middle of talking to literary agents and everything. I would love for it to drop so people could read it at Christmas, but I have no idea. But hey, listen, you know what, Aaron, Tessa, it was awesome talking to you guys. Like, I could just, like, there's certain people that you talk to that trade and know the markets, as opposed to people that are just, that like talk about the markets. And it's just been a pleasure talking to you guys, because I can just tell that you guys are in it.
Thank you very much. For anyone listening who wants to find you on Twitter, can you please share your Twitter handle?
Jimmy Jude 13.
Jimmy Jude 13. Easy as that.
Yes. Yeah. And I'm not selling anything to anybody. I'm just out there talking shit and trying to make it maybe easier for some people.
100%. And we
You're
appreciate
awesome.
that, man. All right, Jimmy.
Thank you.
Enjoy your evening, and we'll chat soon.
You've reached the end of this episode of Chat with Traders. But rest assured, there are more episodes loaded with real market insight and zero hype on the way soon. So to stay updated with each great new release, subscribe to the podcast in iTunes. And we'd love it if you'd leave a rating and review. We'll catch you next time on Chat with Traders.
own opinion at all. I'm simply going to explain the facts or lay out the facts and let you guys decide for yourselves whether it's a good thing or not. I want to talk about the World Economic Forum, the WEF. What is the World Economic Forum? Well, officially, it's an international non-governmental lobbying organization founded by German engineer Klaus Schwab. WEF famously hosts their annual meeting in Davos. This meeting is a gathering of the global elite, politicians, big business, celebrities, and big investors. It's a lobby group in favor of a globalized world, governments and businesses working together. George Soros spoke at Davos in 2011 about redesigning the international monetary system. Bill Gates spoke at the most recent Davos about preparing for the next pandemic. Klaus Schwab talks about the diversity of the WEF's reach in that German Chancellor Angela Merkel and Russian President Vladimir Putin are both members of the WEF. Not only are global leaders members, but Schwab goes on to say, we penetrate the cabinets. More than half of the cabinet members in the governments of Canada, Argentina, and France are aligned with the WEF. In the year before COVID, a quarter of the UK cabinet attended Davos, including Theresa May, Philip Hammond, Liam Fox, Greg Clark, Matt Hancock, Penny Mordaunt, Jeremy Wright. The list goes on and on. You may have heard many of these people uttering the phrase, build back better, over the past couple of years. This is a WEF slogan in relation to bringing about the Great Reset, changing our social, political, and economic landscape in favor of a fourth industrial revolution. It's a campaign slogan parroted by UK Prime Minister Boris Johnson, US President Joe Biden, His Royal Highness Prince Harry, and New Zealand PM Jacinda Ardern. The Mayor of London, Sadiq Khan, as well, to name but a few. It's interesting that they're all singing from exactly the same hymn sheet. Klaus Schwab, founder of the WEF, has released a few books, most notably in 2016, The Fourth Industrial Revolution, predicting social, political, cultural, and economic changes that he said could unfold in the 21st century. His most recent book is titled COVID-19, The Great Reset, in which he sets out a catalyst for this fourth industrial revolution by taking advantage of the pandemic. Klaus Schwab spoke about using the COVID pandemic as an opportunity to bring about the Great Reset. The pandemic represents a rare but narrow window of opportunity to reflect, reimagine, and reset our world. His Royal Highness Prince Charles spoke at Davos 2020, saying, as we move from rescue to recovery, therefore, we have a unique but rapidly shrinking window of opportunity to learn lessons and reset ourselves on a more sustainable path. It is an opportunity we have never had before and may never have again. We must use all the levers we have at our disposal, knowing that each and every one of us has a vital role to play, calling this the Great Reset. Last March, these global leaders, including our Prime Minister Boris Johnson, announced a new treaty for pandemic preparedness and response, which would give the World Health Organization unprecedented control over sovereign nations. The idea being that in a time of global emergency, one world government could respond quicker to, and I quote, keep the world safe and serve the vulnerable so everyone everywhere can attain the highest level of health. I'll say that again for emphasis, one world government. In June of this year, the WEF tweeted a promotional message. Welcome to 2030. I own nothing, have no privacy, and life has never been better. After I tweeted it, or retweeted it, highlighting what I perceived to be neo-feudalism, the tweet was deleted. But that is not the first time they've promoted the message, you will own nothing and be happy.